So now in this slide we are going to explain the types of accounts and the rules and examples. Remember, the entire accounting system is dependent on these three types. The first one is personal account, real account and nominal account. We are now discussing about the personal account. According to this one, the names of persons, natural persons like Robert, Rahim, Ram, like that. Then the other person, artificial persons which are created by law, A to Z company, Reliance company, like that. So whenever we come across these names, this personal account rules will apply. As per this one, the rule is that one. Here in the natural person already we discussed, that means names of persons, we are having some Ram, Robert, then Rahim or Lakshmi, like that. Then we are having artificial persons, limited companies, then representative persons, like you are having when your outstanding wages, expenses are outstanding, like that, salaries are outstanding, rents are outstanding. We prepare this one. Then here the personal account rule is very simple. Debit the receiver, credit the giver. The person who is getting benefited, his account is to be debited. At the same time, the giver's account, the person who is giving the benefit, his account is to be credited. Now let us see your example. Received cash from Sri Charan, rupees 2000. So now here cash and Sri Charan are two important points to be noted. That means cash is increasing. At the same time, who is giving this cash? Sri Charan is giving, credit the giver. So cash account debit to Sri Charan's account is a journal entry, and being received cash from Sri Charan we write as a narration. In the next slide, here real account. Real account are the properties of the business. When we are entering the properties, assets of the possessions of the business, that means what are the wealth of the business. That wealth can be expressed only as per this real account. For example, we have furniture, machinery, buildings, we have land, we have motor vehicles, many things we are having. These all comes under assets. These assets, when we come across these assets, those are tangible assets. Even intangible assets also there, which you cannot see, but you can feel their presence, like goodwill, patent rights or copyrights. These are all goodwill. These are all intangible assets. When we come across these things, then we have to follow the rule. That means debit what comes in, credit what goes out. That is whatever is coming into the business, you have to debit. Whatever is going out of the business, you have to credit it. Now here one example is that purchased furniture for cash. Here two aspects are there. One is furniture, the other is cash. Two accounts are affecting. So here when you are buying furniture, furniture is flowing into the business or coming into the business, and at the same time your cash is going out. Debit what comes in, credit what goes out. So furniture is coming in, debit furniture account debit to cash account credit. That means we don't write credit, just we write on to cash account, that is 4000. Then being purchased furniture for cash. Then we come across next entry. Next one is nominal account. This nominal account means a business has to record the financial transactions of business. That means in a business several transactions will be there. That means revenue incomes, revenue expenses will be there. To run the business we have to spend day-to-day expenditure. For that we have to maintain this one. Like salaries, wages, rent, discount received, commission received, purchases, sales, like that. Several entries, many entries will be there. We cannot discuss now. So there are several entries. That means whatever expenses are incurred by the business, whatever income is received by the business are to be entered as per this nominal account rule. The rule clearly states that debit all expenses and losses, credit all incomes and gains. Now, whatever expenses are there, whatever losses sustained by the business in the course of its work, in the course of its time, then such things should be taken as debited. Then whatever income is received, maybe gains are received by the business through what source, that source should be credited. Now let us see here. Sold goods for cash. Sales and cash are two aspects here. One is sales and income. Through sales we are receiving cash. So that means cash is received by us. Cash is coming into the business. Cash comes under real account. Sales comes under nominal account. As per the real account, debit what comes in, cash is coming in, we debit the cash account. As per nominal account, the source of income is sales, so we are creating sales, that is to sales account. That means cash account debit to sales account, being cash sales made. Remember, these are three entries: personal account, real account, nominal account. In the personal account, names of persons and artificial persons. And there the rule is debit the receiver, credit the giver. And in real account, it records all the assets of the business, furniture, like that. Then here the rule is debit what comes in, credit what goes out. The nominal account records all expenses, losses, incomes, gains. Here the rule is debit all expense losses, credit all incomes and gains. We have to follow this rule to make the entries, to enter the entries in a proper manner. Thank you.